Good morning, traders and investors. Roger Scott here, senior strategist for the Trading Pub. It's Tuesday, it's October 10th, and notice you can't see my face in the camera. I'm actually doing this video from my bed, believe it or not. I'm not 100%. I had a stomach bug or food poisoning, something like that. And I'm getting a lot better, but I'm still really, really weak. I haven't been able to eat anything the last 24 hours, so please bear with me while I get better. And my assistant, Matt, has exactly the same thing that I have. Oh boy, when it rains, it pours. It's about 7:28 in the morning and the market's a little higher. I missed yesterday's trading session. It was one of the first sessions I missed in years, literally in years. Don't like to do that. Kind of throws me off the loop, but it is what it is. Now, as you can see here, the S&P is now trading above the 8-day EMA, which is a bullish sign. This is the 8-day EMA. This is one of the indicators that we look at for actual entry and exit, and I like how the SPY is looking. Most importantly, I'm very encouraged by the communication sector, which we're long right now in the bargain hunter. That one's looking really good. It's moving above the 50-day moving average. And if you look at the QQQ, it's looking really good. Now, one of the reasons why tech is rallying is because this mishigas, this craziness that's happening in the Middle East right now could be a major catalyst for the Fed to stop raising rates in the immediate future, and that's really making Nasdaq and tech stocks very, very happy today. If you look at SMH, which is the semiconductor index, very, very similar price action to what we're seeing right now. And notice especially the indexes that are near the 50-day moving average, like the XLK as well. Right there, hitting whenever something hits the 50-day, especially tech, it tends to swing traders and day traders tend to really move into it. So keep an eye on this ETF right here, the XLK. If it moves a little higher, it'll hit the 50-day line, and we can have a nice little upside move as a result. Notice right here, we key off of the 50-day. Look at how big these moves are. So we could be having one to the upside. Now let's talk a little bit about news and what we can expect today from the market. Let's get a little global dynamics going here. So comments from the Fed officials bolstered bets that the U.S. central banks may stand pat until year end, while investors continue to evaluate the potential impact of the Israel-Hamas conflict. Stocks are doing pretty good, actually. Believe it or not, war does not have as much of a negative impact on the stock market as a lot of investors believe. But on Monday's trading session, the S&P 500 and the tech-heavy Nasdaq 2-week highs. And the Dow is even at a 1-week high, and that's with all of the consumer staples and all of the garbage stocks. Right now, they're garbage stocks. Federal Reserve, Jefferson stated on Monday that officials are in a position to proceed carefully following a recent uptick in Treasury yield. Remember, the bond market and the Fed were completely pricing in two different things. And the bond market, as you could see right here, let me just show you. The bond market is still very, very low, and this was not expected in the pricing range right now. So the fact that yield on treasuries is higher is causing the Fed to possibly cool off in the very, very near term. Now, we're only expecting a 10% chance of a 0.25 basis point rate hike in the next meeting, and only a 26.9% at the December meeting. I think that's partly because of the Middle East conflict right now. We've got Pepsi reporting earnings today. In other news, tensions Middle East could potentially intensify following a report by Financial Times that top U.S. generals warned Iran to not get involved in the conflict. That I don't know if that's a good thing or not. That's probably not great. U.S. wholesale inventories are out today, and market participants are looking for speeches from Bostic, Waller, and Kashkari and Dali. Europe, they're slightly dovish in Federal Reserve's official tone. Boosted risk appetite, mining stocks led the advance on Tuesdays following a report by Bloomberg indicated that China is gearing up to introduce a new round of stimulus. And speaking of China, they closed lower as they were offloading Middle East stocks. They were unloading exposure to the Middle East as fast as they can. Not really good globally. That's not a really good global move, in my opinion. Japan closed sharply higher today, driven by overnight gains in Wall Street, bolstered investors' risk appetite, leading them to scoop up beaten down stocks. Middle East oil supply is the big factor. And the question is, are energies going to continue rallying? Right now, we are almost at the 50-day moving average. I think while the Middle East drama is going to take hold, energies are going to be elevated. I think shorting energies would be foolish right now, and I'm looking for more upside on the energy sector. Looking at all the sectors, you could see communication technology, QQQ. The only subsector from the Nasdaq that's not doing great right now is consumer discretionary. That has a lot of retail, and that has a lot of blue chips, and that has some exposure to interest rates. But look at communication and technology. They're doing really great, and so is the QQQ. So there's very little doubt what sectors are leading right now. You've got communication, technology, healthcare, QQQ. Basically, the QQQ, and then the S&P, and then the blue chips, and then the small caps. That's the order of things right now. And you could see that consumer staples and utilities are not doing really all that great right now, which means non-defensive stocks are doing pretty good. And that's because the Fed may not be raising rates much more further in light of what's happening right now. The biggest factor that you want to pay attention to today, the biggest factor that you need to pay attention to today is the conflict in the Middle East, the bond market, and the S&P 500 in the near term. Now, before I let you go, and by the way, we're going to be, hopefully I'll be well enough to be in my VIP room. Either me or Matt will be there. I'll probably be there from bed, but I'll more than likely be there. Folks, Wall Street is puzzling with projections that Tesla shares could more than double by 2025. And while their predictions might be on point, I believe there's more lucrative ways to harness these potential returns dozens of times over. Options strategist extraordinaire Lance Ippolito, he's identified a unique market quirk, yes, a market quirk, related specifically to Tesla shares. And with this strategy in play, we see the possibility, yes, the possibility of bagging big returns in 6 days or less when the right conditions are met. In fact, according to Lance's report, this scenario has played out over 20 times in the past year alone. Click the link below and check out Lance at 4 p.m. Eastern Time today. You do not want to miss out. Now, keep an eye on the bond market. If bond market keeps going down, it's going to start pressuring on the chip stocks, on the communication stocks, on the tech stocks. If we rally from here on, it'll relieve some pressure from those sectors, and it'll cause them to go higher. Also, keep your eye on the energy sector. I think we're going to pass by the 50-day moving average, and I think we're going to rally from that. Hopefully, if I don't take a turn for the worse, I will see you guys at noon. I'll be issuing trades. I'll be posting on Telegram. I'll be doing it all from bed. I'm weaker than a vegetarian cat. I'm really sorry that I'm not 100%, but I think it's my first food poisoning in 15 years. So thank you for all the wonderful letters of support, and I'm back, just not 100% back. I'll talk to you guys later, and have a great day. Don't forget to send me emails, support@marketgeeks.com. Subscribe to our Telegram channel. Go to rogerscott.com/Telegram, and I'll hopefully see you at noon unless I'm taking a turn for the worse. Bye, guys.